Hi guys, it's me again. Another wonderful day to everyone. But before anything else, let me share to you the good news for today. From the Gospel of Mark, chapter 8, verse 36. For what does it profit a man to gain the whole world and forfeit his soul? Today is the last part of our discussion on basic accounting for non-accountants. And this is the statements of cash flow. Statements of cash flow provides aggregate data regarding all cash inflows of a company receives from its ongoing operations and external financing sources. It also includes all cash outflows to pay for business activities and investments during a given period. So why is it important? For you to know it by heart, just remember letters FPC, okay? Number 1. It enables you to meet your existing financial obligation. 2. Plan for the future. And 3. Provides a detailed picture of what happened to a business's cash during a specified period known as accounting period. Basically, we have 3 types of cash flow statements. To remember it easily, you can use the acronym OIF, and these are cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Showing you 2 kinds of cash, the cash inflow and the cash outflow. On cash inflow, we have cash sales, receipt from trade customers, proceeds of spare assets, receipt of bank loan, and capital from owners. While in cash outflow, we have payment of purchases, payment of expenses, loan repayment, investment in property and equipment, and payment of taxes. Here is a sample of a statement of cash flow from the year ended December 31, 2021. First is the cash flow from operating activities. These are sources of funds. These are additions from cash sales and collection of receivables. We also have uses of funds. These are deductions. These are payments of purchases, payment of operating expenses, and payment of taxes to come up to a net cash inflow or outflow from the operations. Next, we have the cash flows from investing activities. It can be purchase of equipment. Next is the cash flow from financing activities. It will come to additional capital from the owner, repayment of bank loan, payment of interest on bank loan. So to come up to net cash inflow or cash outflow from financing activities. And then we have the net cash inflow or outflow for the period. By adding the cash balance beginning, we will be having the cash balance at the end of the accounting period. To give you a clear picture, let us categorize the amount reflected in the statements of cash flow. For the cash inflow, we have cash sales of 676,500, collection of receivables of 250, with a total amount of 676,750. For the cash outflow, we have 541,600, from the payment of purchases. We also have 30,527 from payment of operating expenses and payment of taxes of 19,775. We have purchase of equipment of 20,000, 30,000 for prepayment of bank loan, 3,716 of payment of interest on bank loan, a total of 645,618. So the net amount of these two total will be the net cash inflow for the period amounting to 31,132. So cash balance beginning by adding the cash balance beginning of 803,867. So we will be having 834,999. The higher the inflows than outflows, the better, because it increases the cash. Using the sample in our previous blogs on balance sheet, Mr. Cruz opened the store that sells steel bars. He invested 1 million as initial capital. How this transaction be shown in the statement of cash flows? So in the balance sheet, it is under asset, cash account of 1 million and owner's equity as capital 1 million. So in the statement of cash flows, it is under the sources of fund, which is capital from the owner of 1 million pesos. Again, sample number 2, Mr. Cruz purchased 500 steel bars that he intends to sell in his store. He paid his supplier in cash at a cost of 200 per piece. How will this transaction be shown in the cash flows? So for balance sheet purposes, the amount of 100,000, which is 500 steel bars times 200, will be reflected as deduction in cash and inventory of 100,000 as addition. So in the statement of cash flows, it is reflected under the uses of funds. This is a reduction because it is a payment to a supplier. Sample number 3. If Mr. Cruz purchased 300 steel bars for 200 pesos per piece and sold it for 250 pesos per piece, how this transaction be shown in the cash flows? In relation to the income statement, it is reflected under the sales and cost of sales accounts. While in the statement of cash flows, it is under the sources of funds, which is cash sales, an addition to the cash, and uses of funds, which is payment to suppliers. These are reduction to cash. Showing you the relationship between these three reports. Let's use the cash account. Cash in the balance sheet must be equal to the ending cash balance reflected in the statement of cash flow. Another items were in the sales account, cost of sales, and operating expenses. These are reflected in the cash flow as sources of funds and uses of funds. The last slide in our topic, but let's see if you learned something. I'm giving you a short quiz to check your understanding on our topic. Ready, guys? We have here question number 1. The accounting equation is expressed as assets equals owner's equity minus liabilities. B. Assets equals liabilities minus owner's equity. And letter C. Assets equals liabilities plus owner's equity. I'm giving you 5 seconds to answer. Correct, you got it right. It's letter C, assets equals liabilities plus owner's equity. Okay, next question. The balance sheet is also called statement of financial position, while income statement is also called as profit and loss. These are the choices. Letter A, true. Letter B, false, or letter C, none of the above? Good. The answer is true. Question number 3. Owner's equity is decreased by all of the following except letter A, owner's investment, letter B, owner's withdrawal, and letter C, expenses. 5 seconds. Very good. The answer is letter A. Question number 4. Net income paid out in dividends is added to retained earnings. Choices are letter A, true, B, false, and letter C, none of the above. Very good. The answer is letter B, false. Are you catching up, guys? Okay, let's continue. We have question number 5. What do you call a document issued to a customer and client to record sales transaction? Letter A, purchase order. Letter B, sales invoice. Or letter C, official receipt. Another 5 seconds. Yes, it's letter B, sales invoice. Okay, question number 6. The accounting principle requires that when assets are acquired, they are recorded at letter A, book value, letter B, cost, and letter C, market price. The answer is letter B, at cost. Last 2 questions. Question number 7. Cash inflows are the money going into a business, which could be from sales, investment, or financing. What is the answer? True or false? Yes, the answer is true. Letter A. Last question. Salaries, power and light, water and taxes are what kind of expenses? We have letter A, selling expenses, letter B, general and administrative expenses, or letter C, cost of sales. The answer is letter B, general and administrative expenses. Okay, did you have fun answering the questions? Who got the perfect score? Congratulations! If not, just check out the part 1, 2, and part 3 of this blog. You can also send us your messages in the comment below. Okay guys, that ends the last part of this series. I hope you have learned something, and you can always watch our previous vlogs on this topic. The part 1, which is the balance sheet. The part 2, which is the income statement as seen on the screen. And the part 3 is the statements of cash flow as we discussed a while ago. Please subscribe, like, and share, and hit the notification bell for more updates. This is your VLL Love. Thank you guys. Thank you, Lord, and God bless us all.